Hey, good morning, guys. It's Simon with TRADERTOUGH.com and Trade and Perform Coaching. I want to do a trade review of ES for Friday, and really a little bit of an overall weekly overview. This review is aimed towards people who are trying to learn to day trade successfully, and not so much the specific pinpoint setup, but in general the overview of how we figured out which way the market might be heading, right? And how you can use some of the market data that's readily available to help align yourself with which bias would be easier to trade and figure the market out. Okay, so I have a couple of rules just before we get started. So first of all, this is for educational purposes only. Past performance is not indicative of future results, which is a really big blessing for most of us, right? And the last piece is anyone can learn how to trade. However, it takes work and dedication. You have to put in the groundwork to build a good foundation so that you can get really good at what you are doing, right? So unlike a lot of things you see where people talk about becoming a millionaire overnight, this is more like building a business, right? And being consistent day in, day out, and doing the small things that eliminate a lot of the frustrations that come with day trading. So let's start at the core. And the core of that is, for me, begins with what the overall profile looks like. So this is what's called the TPO. The green and blue is a TPO, which is a time profile. And this is a volume profile, and it's just exactly what it says. This profile is based on price by time. This profile is based on volume by price, and it's showing you, if you get into great detail and you stretch it out, what each of it is showing you. Relatively quickly. This is showing you what the volume looked like as it went off by each price level. This is showing you where price spent time, and obviously the greater the deeper the line, the greater the amount of time spent. And so when you look at this chart, the first thing that you learn about Friday is that we spent a lot of time in balance, and you can tell that because see how the lack of depth up top. You can also see the lack of volume up top, and you can see how much volume built in a particular area. And once you look at these charts for a while, you can start to see just at a glance of the chart. So you can see how on Thursday, volume and time were rather evenly distributed, meaning we moved up and down through the charts actually pretty nicely. Versus on Friday, you can see we just spent a whole lot of time and a whole lot of volume between 27.66 and 27.68. And volume profile and time profiles help once you get good at reading them. And it's one of the things I teach my both in the room and in my one-on-one coaching, right? I really teach how do you look at this, because what this allows you to do at the snap of a glance, right, when you bring this in, is you can kind of see what the market's been doing from both perspectives really, really quickly. How is that helpful? Well, let me give you a couple of examples really quickly. Number one, you can tell that the market has been, not only has it been moving up, but see these blue areas? These are what's called value, which means this is where 70% of the time, 70% of that particular trading day, and this represents only the US trading session, right? So there's multiple ways to set up a profile. I focus only on the US trading session, because that's where I think the most important information comes from. And so what you get a pretty quick instant look is since February 7th, right? Or I should say February 11th, when value shifted up. You can see that value started shifting up on the 11th. B, you can see that we have a gap that has not been filled on the 12th, right? And C, you can see we're generally in an uptrend, right? All of that information, all that information is important because when you're trying to figure out which way to lean, short or long, right? And depending on your skill level, right? We all have different levels of skill. Some people who are highly skilled can short all the way through a move like this and do so profitably. Some people, right, don't have as high a skill level, and they need to know which way the overall bias of the market is so that they can look for ways to get into trades where maybe they have a lower skill set, but the market will help them in general because we're pushing to the upside. Excuse me. I apologize. I'm going to grab a sip of my coffee. And my goal is to keep this relatively short, right? So I want to contrast this really quick. When you look back the other way, right? And you're trying to figure out shorts. And while I don't have enough data on here to display it, but what I'll do is, so I don't have to spend time loading more data in, is one of the things you want to figure out when the market's long or short is, are we simple things? Are we above or below value, right? You can see the market generally has an easier time flowing down when it's below value, particularly when we've had a couple of days built on top and then it gets underneath, right? And then conversely, when we've had a couple of days of building value and we gap up, the market, this is a pattern of building energy. The market has an easier time flowing to the upside, right? I'm going to try something here real quick, see if I can load a few more days in without delaying the computer massively. And while it does that, I want to show you what my chart ends up looking like, because within that picture, right? So what I do on a regular basis is, or if I've started doing again, and my family's been through a bit of a rough time, so I stopped posting publicly, and I stopped doing trade reviews publicly. Unfortunately, we just had some challenges in our family, and I was unable to do so. But what you'll see is I've now started posting the before and after. Let me see if I can update this. And I bet if I do, there we go. The before and after pictures of the charts. So these are the charts. And I used to think these charts were just massively valuable. And what I learned is the charts are just the basis over time for how I make my decisions and how other traders can use to make their decisions. And what these translate into, per example, on ES, right? So this is ES on top, right? And I posted a little early because I squeezed out. But what you'll see is when I posted this originally, I can grow this. These were the levels that I had. And this was based off of Thursday's trading, right? And the way this works, to give you a quick guideline, yellow zones, right, and white zones are key locations. Light blue zones are areas of interest where I expect counter rotation, but I generally expect for them to potentially get broken and get traded through in both directions, right? The purple lines are the prior day's value areas, high and low. Again, the value areas where we spend 70% of our time in the trading day. And then finally, the green lines are prior day's high and prior day's low. So it gives the members a quick view, just at a glance, of where the key important areas are. And then the last piece is where you see these red dotted lines. These are old swing highs. They're not really important swing highs, but they are recent swing highs and swing lows that need to be challenged, or they're tops of open windows if they're yellow and dotted. They're top of open windows. And instead of having to write out each little piece, there's basically a key, and you know what you're looking at just by a quick glance at the chart again, right? So when we look coming into Friday, there was two areas that were key, right? So inside of value, it's always hard to trade, but these are the support areas inside of value. Outside of value, this yellow zone was the key upside target. On the downside, if we were able to break this level, there were two areas that would have been key. This 27.22, in this case, it was a single line of support, was important. And then the extended target down would have been this 27.07, 27.05, right? So the reason that's important is because when you look at how the day ended, excuse me, and I actually posted this early, so I'm going to show you the update here in just 1 second. And I do not know why. There we go. So you can see that we spent, this was the 5-minute chart from Friday, and you can see when I posted this at 2:30 in the afternoon, we spent most of the day inside this blue zone, which again can get easily traded through. The yellow dotted line is VWAP, right? And we really just didn't make any big extensions up or down, and the rotation was relatively tight. We basically spent it in a 7-point rotation, and this was my upside target. And as I was leaving for the day, I just assumed we didn't make it to the upside. However, when you look on the chart over here, I'll show you. Let's see if I can squeeze through to my 5-minute chart. Well, that's 1.5 range, but I have a 5. There we go. Here's the 5-minute chart, and I'll replace that picture. As you can see, at the end of the day, we finally made a move to the upside of our target for the day on ES, which was 27.73 to 27.79. Right. Okay. So going back to how you would have figured out that the long side was easier than the short side, which is the whole point of this, right? So when we came in on the day, we learned a couple of things, right? And we can look at this chart. I want to show you something here. I want to go back to the prior example now that we've loaded this up. When you look backwards and you look at when we were short or long, see when the market's short, see how we'll get under multiple days of value. And then you can see that most of the value starts building at the bottom of the rotation. Whereas when we're moving up, most value starts building towards the middle to top of the profile, right? Really small distinction, but gives you a big clue as to which way the market's leaning, right? So we knew just from looking at the profile coming in on the day, we knew a couple of things before we got here, right? If this is all that we were looking at, here's what we knew. Number one, if I wanted to be short, this is how it gives you a quick reference to knowing whether we were going to have a big down day, an inside day, a balanced day, or which way the market was generally moving easier, right? So I knew a couple of things. And again, I teach this because I think it's so essential to being able to figure out really quickly which way it's easier to lean and which way to look for your intraday setups, right? So if you look here, value area low. Look here, value area high. The Sierra charts, which I think is great, sets it up. Once you got the program set up properly, makes it really easy to see. And I knew two things. Number one, if I was trading above 27.54, the easier trade, I instantly know who's in control. Buyers are in control above 27.54.50. Sellers have a chance of gaining control even though we have an uptrend below 27.40. That's a starting point for me to making my trading decisions, right? And so we knew coming into Friday, because we gapped up, that we were above prior day's high, right? We were above the week swing high, which was sitting right here. And what that meant for me immediately, if I was a trader with a lower skill set, I'm looking for pullbacks to give me entries to the long side. If I'm an aggressive trader and I'm willing to short, I have to know that I'm willing to cover my shorts quicker unless I see a rapid decline early in the morning, and within the first hour, we actually end up getting below value or inside the prior day's high, so that I can know that shorts are working properly. Okay, so let's go to how this translates, right? And I apologize, I haven't done these trade reviews in a while. As you can see, there's some thought process that goes into it so you can know how to work the trade. So this, right, translates into this, right, my chart. So now when I come into the day over here, I know a couple of things immediately, right? This is just a 5-minute chart. But I know, first of all, this is my first 5-minute bar. There's a couple of rules I have for figuring out whether I want to lean long or short. And one of the first ones is, and the easiest way to gauge is if you're below or above that first 5-minute bar. If you can't get below the first 5-minute bar, right, it's really hard to have a down day if you're trading above that 5-minute bar. So if you're looking for an easy way, or you're having a difficult time gauging longs or shorts, you're not below that first 5-minute bar, buyers are in control. Pretty straightforward. And what would change that? A significant stretch away from that first 5-minute bar might bring you back towards that 5-minute bar. Okay. Ignore VWAP. For me, I ignore VWAP. A lot of people hold VWAP as the holy grail. I don't. Mostly I know when we hug around VWAP, we get a lot of noise. And I try to stay away from trades that set up right on VWAP because I don't like the noise associated with trading around it. And that's true for all products, by the way, right? Unless we're just coming way back, tagging it, and then going, I pretty much personally don't like VWAP, right? I don't like setting up trades around VWAP. I know there's people that love it. I find it's a great place to lose. And here's the important part. As a day trader, you have to maintain a very high win rate, right? So I hear all kinds of stuff talking about people having a 1-to-1 or about people having to have that they can win because they let their trade stretch, right? And all kinds of really common pieces of information you'll find in any book. But here's where the rubber hits the road. I find day traders that can't maintain a 60 to 70% win rate and find opportunities to let their trade stretch have a very hard time succeeding long term. Okay, so next, you'll notice that we never got below that 5-minute bar. Remember, this chart is derived from the TPO and volume profiles. Those are support resistance levels. And what do I expect? I expect that this acts as a support or resistance level, but that it tends to get rotated through easily on both sides. And that's exactly what we got. Why is that important? Because I don't want to short it straight away, even if it's worth the scalp. And I don't necessarily want to buy it. I'm going to have to find other ways to get long, because as you look through the course of the day as it develops, buyers are in overall control. But if you try to use that as a support resistance level, you can see if you're trying to use tight stops, whether you were short or long, you constantly got stopped out. And for me, the rule's even simpler. Around a blue zone, unless I have additional information, which I get from my other charts, I don't trade at that location. And in addition, VWAP stayed there all day long. And sometimes what you know, or the trades you don't take, can save you a considerable amount of money, right? If you keep getting stopped at this location, that kind of sucks, right? So we had two key pieces of information. This is easy, relatively easy to trade through. You had to trade below the first 5-minute low. You were above the prior swing high. All of this told you that A, buyers were in overall control. Shorts, while they may have worked if you were skilled and can pick them off at the edges, were harder than longs. Why? If someone was short and sat in their short all day long thinking they were going to get a breakdown and they didn't cover, right? They got smoked at the end of the day. Okay. Why? Because we went to the primary target to the upside, number one, which is what the market wants to do, right? It wants to go to the nearest primary target. Number two, if you were long, let's say you established your position on dips back here. So you have two traders, both equally patient, both equally were somehow able to find trades on the edge, right? And they both said, one trader said, I think we go down at the end of the day. One trader said, I think we go up at the end of the day. The trader who was looking long had the advantage because he said, unless I close below that first 5-minute bar, A, I know buyers are in control. B, unless I get below the prior swing low, right? Buyers, and you'll forgive me, my voice is going a little bit, have the overall edge on the day, right? And so I would say this: if you're an advanced trader and you have other ways of finding shorts, there was nothing wrong with taking shorts because we were on overall a balanced day, right? But you had to understand the short side was the tougher side. On the other hand, if you were patient and just waiting for dips to get long, there's multiple ways and multiple tools to use to figure that out, right? If you were patient and you waited for your extensions came much easier to the upside and finally rewarded you if you held to the end of the day all the way to the upside. I did not. Two reasons: I don't like trading the last hour, and B, that was a balanced day, and I don't like guessing how the market's going to close at the end of the day. I consider the last hour the crazy hour, where it's really hard to stay consistent. And again, consistency and a high win rate and being able to figure out where you can get greater than 1-to-1 extensions are the key to larger wins, right? So finally, how would have we figured out the long intraday? Now this will make less sense because unless you're in the room or unless you've done some coaching, this is a harder way of looking at the market. But I'm going to jump into it just briefly, right? So I use these. What this is shows me delta momentum, and it's a derivative of the Wyckoff method. Okay, only instead of showing volume, I am using delta. Delta, all it does is shows the difference between the buyers and the sellers. It's the net difference, and it lets me see very easily who's making strong pushes and who's making weak pushes, right? So if you look intraday, where were the best entries to the long side on ES? And you can see I had a little bit of, this was from the intraday chart. And if you go back to the 8:30 open, right? And before I do this, I want to show you one other thing. Look at the 24 hours. So this is important. Look at the ES chart I just had up. There we go. And if we change this to a 24-hour chart, and yes, I know none of this is glamorous. None of this talks about making $1 million overnight. This is all about getting consistent, right? So if you look, this traded overnight. So this comes into Asia, where you can see we tanked pretty solidly. This is London Open right here. You can see we tagged just below. We on Friday morning at 1:45, we probably tagged just below Thursday's low, right? We then trap back in, pushed. Remember the blue zones, I expect counter rotation, right? So I still expect rotation, counter rotation at these areas, right? But I expect them generally to get traveled through, right? We traded back up. You can see that we rejected. So look how the zones work because it's important, right? So I don't take these zones blindly. I need additional evidence because I'm a more advanced trader and I have ways of setting that up. But even if I wasn't, counter rotation, right? We then get above the zone, right? This is value area low, rejects from prior day's value area low, back down into the blue zone, which again, I'm always a little cautious on because they can get traded through relatively easily. Counter rotation up into the yellow zone. This is news driven right here, right? This is news driven, and you can see we pushed in, and it did pause at the yellow zone. Breaks above, backside tests at 540 into the yellow zone, then launches. Look where it launches, right to the next yellow zone, right? That's 6:45, 7 a.m. Counter rotates, gets back above, right? Then you can see between that 7:20, 7:30, we have econ. Doesn't quite tag the back of the yellow zone. Why? Because value area high was holding it up. So this zone essentially gets extended into value area high, right? And then you can see we drive. And look where we drive. Right through prior day's high, right through the prior those areas, prior day's high, low. I need additional evidence of those locations. Those are all locations that retail traders look at that I don't look at because I want to trade where I think institutions are trading or where I think I have a very strong chance of rotation. And finally, if we erase all these lines, you'll see we get to the blue zone. And you'll see initially the blue zone provided a counter rotation at 8:20, right? We pushed in, pushed out. Then we chopped through that blue zone all the way through the beginning of the day. You'll notice the 24-hour VWAP was all the way down here at 27.62, right? Again, showing buyers are in overall control and that we are trending up. One of the things you also could have done is simply popped in a trend line, right, to see that buyers were in overall control. That never got what I would call effectively broken, meaning there was never an impulse move below. And then finally, after balancing all day long, shorts were unable to get any kind of, like that's a big move up, right? You would have expected some kind of counter rotation down. Shorts were never able to get a move down. We were never able to get underneath the 24 hours. And then we finally pushed into our final target. So in wrapping things up, right, the reason why this is all important is when I come back to this chart, this profile chart, within here, I'm able to pick out of these locations key support resistance levels, right? Looking at this at a glance, I can see overall that buyers are in control, and I can know very quickly what I need to be above or below to figure out whether I want to be leaning short or long, right? And then I want to show you one last piece that we would use in the room. We used it for NQ instead of ES, but it was the same setup, right? Which is this. If you look, let me find the range bar. I think I still have it drawn out. Let's see. This is the exact same chart on a what's called a one. It's a 1 point range bar, so it's based on price movement instead of on time. And you can see I look at the delta in very tiny fragments, right? And if you would have looked on ES, I'm going to stretch this out. What this tells me, and again, I know it's a lot of information, but what I can see here very quickly from using this information is that from on top, so I can balance this out for you. So, and particularly because members in the room will be watching this trade review as well. So if you look at 940, I had my biggest push of the day from Delta. So for me, when I look at this Delta push, right, if I was looking short, I would have said, hey, that's a pretty big push, right? And I'm not going to go into the details of using Delta other than to say that's a big push. I would have expected, right, what I think in my mind is a push out if this is not exhaustion. But what you'll see is we trapped back in, right? This is our prior push. We should have broken out, maybe even a little backside test and a push. Instead, what we did is we trapped back in, pushed to the downside, right? Trapped back in, and we rolled back to support. We came back up, right? And never, the yellow lines I just put there, right? That's not a support resistance level. We tried again, failed, trapped back in once again, pushed to the downside. Now, here's what's important. See this push right here? Right, this is occurred at 10 o'clock. This is my biggest push down. It's all the way on top. It told me that sellers showed up. And then as we're pushing down, I get, again, a pretty big push here, right? What this tells me is, again, this is showing me the difference between the total number of contracts bought versus the total number of contracts sold, producing a delta, right? So I would expect when we get underneath here, guys in the room, this is totally normal. I would expect that if I get underneath this, someone made a pretty big commitment to sell to the downside, right? Failure to hold to the downside. And again, I have an algo working in here that kind of helps me out and tells me a bit more information. But again, you can see they came right in behind it and tried to do another sell wave behind it. They closed underneath and they closed back in. And that gave you your push to the other end of the range. Again, the blue zone getting traded through, right? And then you can finally see at the end of the day. Okay. See this right here? See this push right here at the end of the day where, even though it came at the very end, this is a big push, right? This is a big push. See how this push, if I highlight it, this push, even though it's little, gets me above this little down wave right here, right? So see how we're above, and remember, so see how I'm going from very big picture to very tiny picture, right? So this is a big push. I can just see it at a glance. It's a big push, right? So we push down, we get above. Notice that we don't close back into it, right? We don't close down to this little wave. We push again, right? Notice that we come back to test that wave again. Again, we don't close down into that little wave. This wave holds, right? And then we get this big wave. So remember, this big wave, see how we got this series of down waves here? Pushes us up again above this location. And notice we never close back into that location, right? This traps, right? This push. We already trapped late sellers over here, right? Came back in for support. We get back above. We never get back into that range off to the left. And what does the market finally do? Squeezes at the end of the day because they were unable to break that rotation. And there's specific ways to be able to read that to know when buyers are or are not trapped. That is how we were able to figure out the longs and shorts. And we were able to do something similar, not only in ES, but if you look, we can run the same. You'll see this is a chart I had drawn out right here where in the room in real time, pointing out the short, right? Where I pointed out the short here on CL, where we had buyers trapped, right? And you can see they pushed above, right? So shifting gears, this is CL, pushed above, right? Biggest push. Closes back into the prior rotation. You shouldn't see that if the market's truly strong. And that leads to our short to the downside. And you can see now where I'm pointing out, hey, we're probably reversing back to the upside over here. It should have gotten back above 55.21. But even if you look at that, right, and you entered in the entry, by the way, would have been right on this bar at 55.55. It rolls from 55.55 down to 55.05 or 55.07. That's a 50-tick roll, $500 a contract. So this stuff all adds up and tells you really key locations. And if you're patient and you wait for your setups, right, you can make a lot of money day trading. But none of this comes easy. It all takes some education. It takes time to integrate it into your brain so that you understand what you're looking at both statically and in real time, right? But step by step and stage by stage, it can make you a very, very good trader. And it's actually how people make a lot of money day trading versus just looking at something like, oh, it's a zone, so I'm shorting it, or oh, it's a level, so I'm going long, right? Instead, actually being able to look inside the market and see what the market's doing in real time. Anyways, I haven't done a trade review in a long time. I thought that was a very good trade review covering everything from the basics to getting into the detail of how to enter a trade and really take it to the house and just kill it. And then there's one last component that I want to mention, right? Which is the market has to be moving at a pace that's comfortable for you, whether it's slow, fast, too slow. You have to be able to move the time frame you're trading, you need to be able to mentally and emotionally be adjusted to so you can take the money out of the market, right? If you don't, right, if you're not mentally adjusted to that, life becomes very, very difficult. And if you got to make sure that you're matching up your personality to the time frame. Anyways, I hope this is helpful to everyone. This is the trade review, and I thought it was probably my best trade review I've done in a long time. There'll be more stuff coming out from me now that I'm getting more free time on my calendar. Hope everyone has a wonderful, wonderful day. Talk to you later. Have a great day, wonderful weekend. Stay profitable. Don't blow up. Oh, and if you would like a trial into the room, you can send me a message to TRADERTOUGH@gmail.com. Again, that's TRADERTOUGH@gmail.com. And you can always visit the blog site if you want to see some of my older work, which is, if I can find it right here, I'll show it to you. There we go. It is Trade and Perform Coaching at blogspot.com. Have a great weekend, guys. Trade well. It's not an easy business. If you look at it as a hard business and you work your way towards getting good, it's a lot easier to make money than going, oh, this is going to be easy. I'm going to make a lot of money and then losing all your capital, which is a horrible thing. Anyways, I will talk to you later. Have a great day. Bye.